As a long-term investor, especially in smaller stuff, like you're going to feel like an idiot most of the time, to be honest, because the herd is charging against you. You just got to wait it out. And if I'm not saying your thesis is right, but if your thesis is right and the story plays out, given enough time, eventually you win. Welcome to Wall Street Wildlife with Luke and Christoph. On today's episode, how price drives sentiment and why that is a big problem, and why crypto is still a huge circus. Plus, we're 1 month into King of the Jungle round 2. We're going to check in on our results and see who's winning the second stock battle.
How you doing, Badger?
Pretty sweet. I'm pretty sweet, Christoph. You know what? I've been investing some of my ludicrous to the moon Rocket Lab gains in this week.
Fantastic.
Well,
I helped you afford a brand new fancy Badger t-shirt, huh?
Oh, yeah, that's right. That's right. But not just a fancy Badger t-shirt. Do join us on the YouTube so you can just, not only so you can see my fantastic new t-shirt, you can see this beast of a beard that Christoph is sporting. Actually, I think I said this on the Patreon, but I didn't say it publicly. I'm going to say publicly, I am nearly a 53-year-old man, and I cannot grow a beard. It comes out like patchy and spotty. It's bullshit. I properly tried twice in my life when I'm like away for a chunk of time, because Katrina does not like even like the fluffy, shitty hair I can grow. It just doesn't work.
So this is so important because, first of all, yes, people on the YouTubes are going absolutely bananas for Monkey's beard. It feels like Beatlemania all over it again, Beatlemania 64. So, it's really flattering. Thank you to all my fans, but, pipe down because, rabid animals, who knows what they're capable of. But it also made me think, Badger, of what our second-year contest prize could be for the King of the Jungle round 2, which is that the winner has to, if the winner is Monkey, then I suppose, I get to shave my beard. But if the winner is if the winner is Monkey, Badger has to grow a beard.
It just doesn't work. Nothing happens. It's going to be lame. You'll be disappointed. It's not going to be much of a contest. I can't will the beard into position like a bone.
What about whatever scratchy, patchy you have to just walk around? Really?
Yeah. No dice. If only because like the wife is not a fan of even the shitty beard. My ridiculous body can't grow. So yeah.
Well, that's the point. If you lose round 2, the consequences should be dire.
No, I'm not punishing my wife with just because of my stock transgressions. But I did anyway. Sorry, you waylaid me because I was going to say I have been investing my Rocket Lab Luca, and I've built a cinema at home. So I had some friends over at the weekend, and we watched Gladiator 1. And it's not I built a cinema. Like I've now sort of come to terms with the fact that I'm probably stuck in this house for at least another 2 or 3 years. Like I'm quite keen to move and do a self-build. That's probably not happening anytime soon. So I'm like, screw it. I'll just do like a half-assed cinema. So I've now got a cinema in the lounge.
Oh, that's fantastic. I'm a big cinephile. I don't know if you knew this about me. I taught a course in about film and film cinema history. Anyway, so can't wait for you to invite me to watch some good old-fashioned art flicks. Most importantly, though, are props to our Patreons. Our community now, I think we could officially say, is a rollicking good time. We're posting, quote unquote, all kinds of garbage over on Patreon. For those of you who like the stink of AI generated images and all kinds of behind the scenes stuff. But most importantly, major shout out to one of my favorite investors on the whole planet, Barbara, who joined us as a Patreon. Bless your heart, Barbara. You know how much I appreciate you, and you will no doubt bring immense goodwill to our community. So glad to have you. Major props also to Sunil R, Ben, Adrian D, and Big Mo. Thank you, buddy, for joining us in the inner circle. We are so enthused about our tribe and how it's growing, and
It's pretty cool. We've got a whole menagerie of animals. And I'll add my welcome to all of our new members as well, especially Barbara. Like, Barbara, thank you very much. Because we know you supported the show from way back, because we always got these nice little comments from you on YouTube as soon as we started saying, hey, comment on the YouTube. You were first one there. So we did notice that. So we appreciate your patronage also.
You know, I want to say one more thing about Barbara, if I may. When she leaves a comment, it's really thoughtful. You know that she's done the research and listens to things carefully, and it's almost like she replies from the heart. I know that sounds a little new agey and maybe squishy to some people, but to us as proper professional investors who know that doing things with care makes all the difference in the world, all of us could do better by emulating the kinds of thoughtful responses and questions that Barbara leaves. So again, really excited to have her join us.
That is a great segue to something we're going to talk about a bit later on today's episode, around sentiment, price, and some of the YouTube and comments we get on X, because there is something interesting. But anyway, let's save that for a bit later in the episode.
So you want to educate me about something called the 24X National Exchange?
Yeah. I just literally just caught my eye like a half an hour before we started recording. So I don't have any deep insight, but it's quite interesting. So like you use Robinhood, right? And Robinhood is one of like many brokers that now essentially support like 24/5 trading. Like you can trade pretty much round the clock, Monday to Friday or thereabouts, like maybe give or take a few hours. But the way that's done with brokers today, because like NASDAQ and NYSE are not 24/7 exchanges, like they're open like New York market hours. So that kind of takes place on an alternative exchange, and that they're less liquid. There's less like transparency. Like if you don't use like limit orders when you trade outside of regular market hours, like you can get hosed. You can execute a trade at a price you had no plan of executing at. So it's a very different kind of dark world than it is trading during normal market hours. I don't know too much about 24X National Exchange. It's due to come online middle of next year in a kind of phased release. But I think they're hoping to bring a bit more of the rigor and low robustness of trading on like NASDAQ and NYSE to after hours trading. So that potentially is a good thing.
I think this is a moment for us to do a little bit of work for some of our potential beginner investors. And that is the difference between limit and market orders. I'm still guilty after decades doing this of sometimes having an impulsive buy. And I think, when I just think, oh, I want this, I'll just I put in the thing I want, and then I send it via market. And then because I'm willing to pay whatever the market price is at the time. In general, that's not high class. In general, what you want to do is always use a limit order, which says, this is the price maximum that I am willing to pay. And even if and almost always, it executes within a minute or two anyway, or seconds. So it's not, for the most part, it's not really the issue. The issue is the principle that if you are dealing, in fact, with commodity, with companies that have lower liquidity, or the exchange itself is not the exchange, you will lose money literally by paying more than you have to, simply because the market is set up to favor the market makers rather than the purchaser. So as good etiquette, you should be using a limit order, I would say 95% of the time.
Yeah. And some people use limit orders in a different way as well. They use them actually as a tool. Like, I guess what you're describing there is, like, I've got a trade, a buy or a sell. I want to execute it like now, but it's still good practice to put a limit order in, put it pretty much at the price, like pretty much at the midpoint of the price, whatever you expect to pay. And then you're right, with a bit of volatility, it'll probably execute. You might have to tweak it. But some people will set limit orders up with the expectation that they won't execute. Maybe a chap I know who's talked about his strategy, he might own stock and he wants to add to his position. So he might set limit orders that are like 20, 30, 40% below the current market price, because he knows if a stock does bomb, sometimes there is like crazy volatility on a day something's happened, like he knows he wants to pick up stock at that price. And if the world changes, the thesis changes, he just cancels those limit orders, they don't execute. So it is a legitimate tool you can use. I don't like doing stop losses, but that's another way to use limit orders. You might, if I own, say, Tesla stock and it's wildly volatile and I want to, like, I don't think this is a very good idea, honestly, as a long-term investor. But if I want to kind of lock in my gains, I could set a limit sell. So if I own like a chunk of stock and if the stock goes down, I don't know, 10%, 20%, then my position sells because in theory, I think the theory is like you're protecting yourself against like a huge downside. The practice is you're not really, because like literally if a stock like sells off for some very significant thesis breaking piece of news, like we talked about Sava last week, like the stock can open 90% below its price. So you don't magically get your limit price. Your stock will just sell at 90% below because the limit has triggered, but you're way below your limit.
Yeah, so I think to keep it simple, the way I understand it for myself is when I'm methodical and thoughtful and I'm planning ahead, I use limit orders. When I want to make a decision in the moment, not caring that I'm giving away some money to the market makers, I'll use a market order. And good hygiene is use limit orders in general.
Yeah. So you had some thoughts about sentiment following price. Tell us about that.
Yeah, this is the big thing I want to talk about this week, Badger, because I think I, like you, am sniffing a market bubble or bubble-ish behavior. And we've been through this, last time was 2021?
Yep.
So it's been about 3 years, right? And human beings have a tendency to forget after a while.
Yep.
The main point, and I'm going to use two examples to demonstrate this. The main point is that most beginners, or most, I would call gamblers, and to use the parlance of the day, degenerates, look at price and then, like a degenerate gambler would, draw all their conclusions from the price. So if the price is down, that means bad. If the price is up, that means good. And nothing could be further than the truth. And this is what makes professional investing different than all of that nonsense and makes it harder. So here's the example, a couple examples I want to use. One of our viewers on YouTube commented about Coherus. This was, I think, 3 weeks ago when the share price dropped down to 68 cents. And the comment was basically, this company is garbage. It's down to 68 cents. CO is awful. Basically, right? Looks at the price, down in the dumps. Conclusion is the investment is terrible. What did I do around those prices? I added a bunch. Mm-hmm. What's the difference? I was adding on the back of immense amount of research and a fundamental understanding of the company. And in this particular case, I'm looking pretty smart right now because it is up close to 90% right now as we speak from those lows. And my response in that comment was, price does not indicate whether the thesis is broken or not. To understand that, you have to actually do the work and understand why the price went down. Is it temporary or is it permanent? Is the thesis broken on those terms, right? So I mention this because this is just like 90% of what we see in public, on public forums, on the Twitters and YouTubes. It's just a bunch of nonsense. And it is very easy to get fooled.
Yeah, it's a dangerous shortcut. And that, like, it's not analysis. It's just kind of following the herd, essentially. And like the price is an output. Like you have all the things like earnings and what's happening in the world and like the company's strategy and like just how it's led and how it's operating and how efficient it is. And all of these things happen. The company makes money or it doesn't. But the output of all of that essentially is going to be like the stock price. What does the market feel about all this real stuff that's happened in the world? Like if you want to look at the output, you are, by definition, you're just kind of following the herd mentality. There's no way to differentiate what you're doing.
And here's the thing. This is so important. This is what I learned during my technical analysis education. Short term, if you think of yourself as a trader and you're basically only playing math games, then the price does matter, because in the short term, price is telling you where the momentum is going in the math games. Like that's the ultimate piece of information you need. But we are not traders. This is not what we teach predominantly. And therefore, you do not know as a long-term investor what is making a price go up or down or sideways. It's kind of a black box run by quants and funds and people with way more money than you have, and they can make the price of an asset go up or down to a relative degree at their whim. Yeah. They can't do that, for example, with Nvidia, because that's $4 trillion, right? Mm-hmm. But you know, outside of the mega caps, any one fund, if they really wished to make a price go where they wanted, you'd be surprised at the shenanigans that ensue. So it could, like, I'll do a little conspiratorial theory on Coherus. I know a lot of institutions own that stock. And all those institutions know that the upcoming quarter, say, is going to have bad news because of manufacturing disruption. It's entirely in the realm of possibility that those funds themselves helped drive the price down so that they could eventually buy it back even cheaper for themselves, right? Knowing that the outcome in the future is going to be much better. Yeah. I mean, you just don't know, right? That's the main point. So to me, this is a major, major, major teaching that we could offer people. Do not let price confuse you. Price does not equal value.
Yeah. I have my own example of this on X a few days ago. Like I could end up with egg on my face here because I had some guy, and you might remember I put Oklo, the small modular nuclear reactor stock, I put that on my radar, like stock safari back in September, but I said it's not investable yet. And we made like a YouTube short, which was like, this is uninvestable today, but it's on my radar. And the stock has obviously like tripled since then. Well, because like the market loves it, right? So I just had some rando on X saying like LOL about this is uninvestable. So we had a bit of back and forth. I don't like to argue with the trolls, but like I think time is going to be on my side with this one. So I put like a to-do in my own diary, dated like a year out, reminder to roast this guy in 2026, ref Oklo. And I tweeted a screenshot of that reminder to him. And then he jumped through my Twitter history and tried to pull out some other BS. So anyway, like whatever. We'll come back in 2026 and we will see, am I roasting this guy or am I feeling like an absolute schmuck because it didn't just triple it like 30x? Who knows?
I love this. Monkey is getting his popcorn ready to see Badger feeding crumbs to the trolls under the bridge. This is great. Okay. Can I bring up the second example of why I really want to double down on this price versus value topic? I would say one of the most maddening things in my experience as an investor has been when the fundamentals lag behind price, which happens all the time for all these reasons that prices, call it, manipulated by the big boys, right? Manipulated or whatever. It's a complex system, right? Which we can't predict ahead of time. Yeah. One of the most painful things as an investor is the way we do it is to put in all the work, all the time, all the research, right? Over not just days, but weeks and months, right? Start establishing a position that gets bigger and bigger on the strength of analysis. And you look at the price and the price, crickets, nothing, right? Or even goes down. Yep. You start questioning your sanity. You start questioning whether you're right. And sometimes you are wrong, or right? That's not the point. But meanwhile, right, the thing that is legitimately valuable is doing nothing, while a whole bunch of garbage, meme coin, momentum, kind of like gambling degenerate stuff is skyrocketing. And it makes you really doubt your own, right? It's like, what the F in hell? Like, what kind of universe are we living in? And that's precisely what I tweeted this weekend, because as our faithful listeners know, my largest investment overall is Chainlink. And if you look at the Chainlink chart over the last several years, the price has basically stayed, well, depending on the time frame, but it's still not at its all-time highs from 21. And there was a period in 23 where it's basically all-time lows, just kind of sitting there doing nothing for a long, long time, right? Meanwhile, the shit coins are jumping. So this weekend, this coin called XRP, which from my understanding, having done a lot of work on Chainlink, in the end will not be needed. Like, it's kind of one of these, it looks good on the surface, but when you pull back all of the hype and all of the stuff, people will find out it's not what it looks like. And it has gone up. I think we'll post the chart. This is the chart. It's kind of straight up. It's kind of gone up. It's now the fourth largest cryptocurrency by total valuation. At something at God, what's the number? Let me find it, because I think it's worth noting, to be honest.
While you're digging out the price, I'm just going to note with some hubris, because we know we're seeing the Chainlink guy for an upcoming episode. So I did my own little mini research. I owned XRP, Ripple, and so I sold all of my shit coins to buy some Chainlink to motivate my research. So I think I may have sold XRP before it went parabolic. So thanks for that.
You're welcome, Badger. It's what I do. It's the whole point of what I'm talking about. So I am looking at this market cap. I'm gonna let's put this up on for our YouTube viewers. XRP current valuation 160 billion. So it's basically Bitcoin, Ethereum, XRP, up close to 100% in the last week.
Great.
Meanwhile, Chainlink down at number 18 at 13.5 billion, right? And so what's the difference? That's a difference of 10x.
Yep.
More than 10x. And one of these coins, if you believe what I'm telling you, is I want to say, maybe I'm being a little over dramatic to say garbage, but in terms of actual infrastructure, it's a meme coin compared to Chainlink. So you will see. We could quote that. We could come back in a couple of years, because when you've done your fundamental analysis, you know the difference between rah-rah stuff and the actual.
I'm not going to speak up massively in favor of XRP, because I'm not a crypto guy. I know nothing about any of these things, but it was touted as being like the rails for banks to access the crypto ecosystem. Like, whether that was ever true or not, I've got no idea.
Right. That's exactly the point. Right. When you understand things on the fundamental ground, you'll hear all kinds of things on social media that most people just looking from the outside can't tell what's true and what's not. And so if you're like, I don't know because I'm not an expert, then the next thing you do is you look at price. Oh, this thing is going up, so it must be true. That's what I'm warning people against.
Makes sense.
And I'm also saying that it's incredibly painful. I'm speaking from experience to hold, quote unquote, the real thing, watch it do nothing, while the fake thing is rallying 100%. It feels unfair. It feels unjust. You start questioning your own everything. So, and that could last for years. Unfortunately, that kind of disjunction. But in the end, price will always follow fundamental value.
Yeah, we can agree on that.
And so the patience that's needed is kind of, I think, why you and I return to this topic over and over and over again. You cannot be a legitimate, successful long-term investor where the biggest gains are made if you do not have patience and you don't have the kind of community that we're helping to build, and with whom to double check your ideas. And am I nuts in thinking this, right? What am I missing? Just basic critical self-reflection. So meanwhile, the good news though, Badger, is, sorry about this long rant, is that today Chainlink is actually up 14%. And so, why? Why today as opposed to yesterday? Who knows? But I'm so comfortable knowing what I know after the years of research that price is not distracting me.
Okay, good. That's like as a long-term investor, especially in smaller stuff, like you're going to feel like an idiot most of the time, to be honest, because the herd is charging against you. You just got to wait it out. And if I'm not saying your thesis is right, but if your thesis is right and the story plays out, given enough time, eventually you win.
I do, yes. But as you were saying that, I do want to argue against myself just a little bit, which is to say that there is this element of thinking you're smarter than the market, which cuts both ways. Yeah. And it can be the case that if price is going down steadily, but over a long period of time, but you think for whatever reason that the market is wrong, I would say that odds are higher that you are in fact wrong.
Yeah.
But if you have done the work and you have what I would say, kind of an inside view, you're working with experts, or the industry, or this isn't just a lark, and you follow the story, then your odds increase that way to saying the market could be wrong, but that's the less likely event. So I know this might sound like a little bit of a contradictory message I'm sending out. Like, point one is price can often be insane and you don't know what's happening, so don't follow it. But on the other hand, if the price is disagreeing with your fundamentals over a long period of time, you are in fact probably more likely wrong than the market. And to me, this is one of those paradoxes that I know how to navigate. And I think you begin to tell what's what, as long as you're clear-eyed about your own biases, right? Yeah. Motivations.
And coming back to something we said, my drunk tweet we talked about a few weeks ago, like a key part of that was having a process to improve your process. Like, as long as you can introspect and see where you've made errors and where you've got opportunities to improve, like as long as you apply that methodology and given enough time, like your process will improve, your results will improve. If you're just sort of blindly trading and you're not even keeping a ledger of what you bought and sold and why you bought and sold those things, like you're throwing away valuable learnings, opportunities. And so, yeah, I'm not saying you're setting money on fire, but you're giving away so much future value in not having that process.
Yeah, that's one of the things that I really admire you for, because it's clear that your process has been really like tight from the very beginning, right? Since the beginning days. And this is one of my great mistakes, that I hate accounting so much that I don't have, proof of my ultimate returns from my lifetime returns, because I screwed up the ways I kept track of things, and they're not auditable and blah, blah, blah. Okay. But you are making me a better investor by encouraging me to write those journalistic entries into, I bought this because, and I sold this because. Yep. And it also slows things down, and it gets you, out of the price pulling you by the nose mentality.
Yeah. We're going to come back to our stock safari segment in today's episode. And I have a safari stock that I want to reflect on that comment you just made about.
Okay, cool. So does that feel like a good conclusion about don't let price fool you segment.
Yeah, like we're not going to stop the Twitter trolls, right? The guys and girls who just don't look beyond the headlines and just make some sarcastic comment because whatever, it's like their entertainment. But, that's just it's the nature of the game.
Indeed.
Oh, what? Holy hell, what the hell? That's on video. What just happened?
A clap in the book stacks.
Listeners, if you're on, get on the YouTubes. That's completely unplanned. So if you've never seen Christoph's office, it's this multiple enormous stacks, like towering volumes of books, and then there's one like thing of whiskey. I've been in that office. Like, it's beautiful, it's chaotic, and you just had like a complete like Walmart.
It's not chaotic. It was all stacked on tall piles, which are more chaotic.
Yeah.
Motherfucker.
Yeah. Well, that is a great intro. Well, let's finish the episode before you go and tidy up. Nothing light. There's no candles lit back there or anything, right?
No candles.
Okay, right. So we were going to talk about the topic of like why crypto is still a huge circus. Now you have like this perfect huge circus of books behind you.
Yeah, so this is a little redundant to what I was talking about, but everybody has to. I don't care if I'm repeating myself ad infinitum. There are shit coins and meme coins right now that in crypto that are worth tens or hundreds of billions of dollars. Some of them literally meme coins, meaning like it's the equivalent of buying tulips back in whenever the tulip craze was happening for massive amounts of money. And that's kind of for the most part, the face of crypto. When people hear about it, that's what they think. And when you have such massive amounts of money on the table, like, it's not a wrong conclusion. It's like, holy crap, this stuff exists. So listeners, please do not feed the, I was going to say monkeys, but don't feed the, whatever the caged animals are in this crypto circus. There are essentially 3 legitimate crypto projects still to this day at this point in the cycle. Bitcoin, Ethereum, and Chainlink. Everything else you're sort of playing, and maybe I'll add Solana, okay? Because there's good tech there. But outside of that, once you cross that line, know that you are, it could be, who knows what you're really investing in, okay? And that's a conservative view because there are a lot of, I would say, legitimate crypto projects that are kind of like startups. But the way their coins are trading, it's circusy, and then people get rug pulled all the time. Rug pulled means it's kind of a scam where people bid up the price, and then once it's high enough, sell, and then people lose their shirts that way. So do not mess with crypto right now, honestly, even though it's this massive bull cycle for crypto, unless you are dealing with one of those 3 or 4 coins that I mentioned.
And you've almost certainly heard of Bitcoin and Ethereum. You may not have really heard about Chainlink other than Christoph mentioning it a few times on this podcast. We do have an upcoming interview with a Chainlink expert where we all, me included, are going to learn about this thing.
Right.
Alrighty. Shall we look at our King of the Jungle portfolios? Because you always ask me, Luke, what have you done in your portfolio? And my answer is always, nothing. I've done some stuff. In fact, I did some stuff a couple of weeks ago, but we had to bump it off the roster last week because there was so much to talk about. So I'm a week overdue in telling you all what I bought and sold.
Excellent. Tell us.
Not very exciting, but I did. So you might remember, as we went from King of the Jungle round 1 to round 2, both of our portfolios are doing great. We are in year 2, and it is interesting. Like the line from year 1 to year 2 was like the 1st of November. And that's like a month ago. Today is the 2nd of December, that's our recording day. And like your portfolio is up 54% in a month. I'm losing, but even my portfolio is up like 40% in a month. Like, that's pretty wild. So anyway, you are soundly winning round 2, but it's like we're a month in. So that means nothing. But anyway, I thought I would execute on my conclusion from year one, which was I was holding too much cash. I hold a lot of cash in my real account for reasons that I've talked about extensively. It's kind of those reasons don't really apply to King of the Jungle, so I'm just going to invest it. So I've just added to like a whole bunch of my favorite positions. So I've topped up Mercado Libre, I've topped up Amazon, CrowdStrike, my India index. I've added to Alphabet, Google, and I did buy one brand new position, which is one I already own in my real money portfolio for some time. It's a company called ASML, and it's like at very, very high level. Like you know about NVIDIA, they build or they design the chips that are used for AI, and those chips are manufactured mostly by a company called TSMC, Taiwan Semiconductor Manufacturing Company, maybe. So TSMC like operate the factories where they make the chips for NVIDIA. And then TSMC buy these incredibly expensive machines that they use to build the chips. It's like the machine that makes the machine. And those giant machines that are like hundreds of $1 million for one unit, those are manufactured by ASML. So they're like the guys making the things that make the shovels that dig the gold, whatever. Anyway, this analogy is breaking down, but that's where it fits.
I would highly encourage anyone to YouTube that company or maybe find another documentary, because the technical, it's sort of like a really first wonder of the world. The engineering, I don't know, I'm calling it engineering, but in order to make the kinds of these advanced chips now, it's just stunning what it takes. And so you will learn so much by just watching that factory and what goes on inside. It's really amazing.
Yeah.
Two, our spreadsheets for new listeners are available on our Patreon page, where you could see our percentages and all of the tickers that we hold and the current values of our portfolio in fine graph fashion. Yep. So hop over to patreon.com/Wall Street Wildlife, where you could see badger versus monkey numbers in real time.
Yeah, and actually, like we do have some public facing content. You don't need to be a Patreon to see some of this stuff, and that's definitely one of those bits. You can go check that out for free, public accessible at our website. You've done some stuff as well in your King of the Jungle portfolio.
Indeed, because if you remember, my intention for this year is to buy $50 worth of stuff every single week for all 52 weeks. And I found that the $50 is a good constraint, because it kind of forces the consistency and discipline. But sometimes, like, I don't want it to be like, oh, I can't buy an extra share because I would go over the $50. So I'm using it sort of a rough, ballpark, like around $50 per week. And so this week, because I've had crypto on my mind so much, and for good reason, aka Donald Trump's election is legitimizing crypto. This is all the regulatory stuff that crypto people have been waiting for. I really think we're at the beginning of a massive bull market, and everything I know from Chainlink and the regulations that are starting to fall, I've never been more bullish on crypto. So after the huge technical scuffle I had with SoFi, I moved over my money to Robinhood, and I added a Chainlink. I added one Chainlink token. I added 0.0001 of Bitcoin. I wanted to have Bitcoin officially in the ledger. And I added 2 shares of IREN, IREN. That is the, I think, best miner plus AI play. They just had earnings last week, and they were spectacular. They delivered. These guys, I'm telling you, these guys are execution machines. And during the call, you'll enjoy this, Badger. During the call, I want you to imagine the two CEOs are Aussie guys, so they speak with that kind of like cool Aussie accent, sort of like the one you have. You know, the ladies go crazy for the for that kind of like more sophisticated English. Anyway, he said that 2 hours before the earnings call, a hyperscaler called them or sent them an email saying, "Oh, and by the way, we are really interested in your 1.4 gigawatt land/platform that you're building out." So there's a lot of speculation as to who that hyperscaler is going to be. My money is that's Microsoft. And if that contract executes, that's going to add billions to their market cap. So that story is playing out beautifully. And this morning, right before we started recording, I added one share of an old favorite of mine from 7 investing days, Avita Medical, ticker symbol RCEL. And that's what I'm going to talk about for my stock safari stock. So I'll pause there. So a bunch of crypto stuff and a beginning share of a small biotech, biomedical.
Yeah, pretty good. You know, I'm looking at your 100x portfolio from last week. So I'm in a bit of a quandary. I don't know if you can... 10x portfolio, sorry.
Although I wouldn't mind, but...
I'm in a quandary.
Let's be reasonable. Let's not lose our heads. Come on.
So every Christmas, every year, I buy a story stock for all the kids in my like extended family, like my cousin's kids and my niece. And like last year, I knocked it out of the park because I bought Rocket Lab for all of them. That's like up 400% in their accounts. So awesome. That present has compounded beautifully. Like it's December now, and I'm like thinking ahead to what's the gift for the kids this year. I got nothing, man. I got nothing. Everything is so overvalued. Like, how do I pick a story stock for the kids?
Wait, okay. I know what you mean, but what am I? What is your good friend Monkey? Are you so afraid of the dung heap?
I can't. I mean, I thought seriously about buying Coherus for the kids. But like the bigger part of this gift is not the stock and the money. It's like getting the investing journey started, right? And when they're old enough, they're not all old enough yet, but when they're old enough, if they then want to have a conversation with me about investing, I don't want the conversation to be about this like funky ass biotech. And then I got to pick legit stuff. Anyway, so I'll tell you what I'm thinking of doing. Because I am thinking about ASML as a possibility, because I think that's actually reasonably valued right now. The other thing I'm thinking about doing is maybe just contributing to like a balanced portfolio. I can probably afford to buy them maybe 3 or 4 things each, and for it to still make sense with transaction costs. So maybe I just pick like a couple of solid stalwarts that hopefully aren't too overvalued. Probably have Tesla in there, and then just buy them a bit of each.
Okay, when I pitch Avita Medical for the Stock Safari segment, I'm not going to do a deep dive, obviously, but I want you to really consider that as a potential option.
Okay, well, let's do it. Should we go and do Stock Safari? Because maybe
sure.
I got my ears.
Okay, I just queued myself up, right? Okay. Let me take that as a segue.
Okay.
And let me say, I get what you mean with something like Coherus for the context you described, because to me, Coherus will not be a long-term buy and hold. It's mostly a situation, call it special situation that has happened, though that too could change. Okay. But I get why it's off your radar. And I could also see why investing in pre-revenue companies that are, will the drug make it or not, that's closer to the gambling side, and you don't want to encourage young investors to take that route. That makes sense. But then take a company like Avita Medical. Okay. It's currently, call it around $350 million market cap. Now, so let me pontificate a little bit before I get into the company itself. I used to be a large cap, mega cap snob. kind of like you are right now. For the most part, although because you're so successful, whatever works, whatever floats your boat. But 2021 taught us all an important lesson, I think, that it doesn't matter how big a company is, it could still also fall 40 to 50% because valuations can get extreme no matter what.
Yeah.
It's all relative. And so when I got rid of my elitism about the company needs to be, say, billions of dollars, and I think to myself, well, Avita Medical is a company worth $330 million. That's a massive amount of money, right? It's a massive amount of money, $330 million, right? Except it's hard to admit that when relative to NVIDIA, that's $3 trillion, right? It's a drop in the ocean. But good investing, I think, Badger, should actually start from this direction rather than the other one. Because most investors, like most businesses, the lemonade stand example, right? When you're teaching kids how accounting works and making lemonade, what's the most a lemonade stand's going to be worth, right? $100, $200, right? But you're teaching the correct principles. Yeah. It's easier to understand a lemonade stand. So I actually think, and we could probably talk about this in teaching your kids to invest episode in the future, right? That it's actually, there's more merit, so to speak, to helping people to, not more merit, let me not say more, better than, but call it equally as principled to find a legitimate company that has a smaller market cap because it's easier to conceive. And in this case, Avita Medical, here's the quick short pitch, is a company that helps doctors treat people with skin wounds. So just imagine all the horrific things that happen to the hundreds of millions of people around the world, or in the United States, if you want to keep it local, that, burns and cuts and accidents, right? They developed this cool little machine that basically, long story short, helps doctors repair skin accidents better. Well, we just learned on the last earnings call that their newest generation machine, they're switching from actually selling those machines to merely leasing them, mostly for free. So that gives hospitals and doctors more access to the machine, but it will be the cost of the, call it, replenishable peripheries that doctors and hospitals will be paying for, which have astounding margins, I think 85%, and will increase usage. Meanwhile, Wall Street is still mostly sleeping at how quickly this company is growing. They recently had some sales issues because of regulations. So as happens in the biotech world, sometimes, there's these little speed bumps, right? Where things don't go in a straight line because it's not like recurring revenue, like software, right? Blah, blah, blah. So what I'm saying to you here is you're looking to buy stock for your kids. Here's a company that does, for your family, right? Here's a stock that does immense good for the world, is badly needed, is growing very, very quickly, has this incredible new business model, replenishables, is trading at a really, really, really low valuation. And to me, it's like, what better situation do you want as an investor? It's easy to wrap your mind around. It's not a shit company in the ways that, it's not a gamble. It has real revenue already. It's probably going to be cash flow even later in 2025. And that's not even talking about the, what's it called? I always get this word, the vitiglio, when the skin disease where people have their skin pigmentation is not uniform. So it's kind of a social stigma for many people. That's on Avita's radar for the future. And that's going to be $1 billion TAM later on. Mm-hmm. So that's why I bought my one share this morning, because in the King of the Jungle, because as I refresh my memory as to how good a company this is, I was like, I want in. And it's precisely last thing I'll say. it's precisely because so much stuff is now hyped up and overvalued, or the valuations are stretched and the market's kind of losing its marbles over, the FOMO and all of that. That's exactly when I start getting more serious about these overlooked, under the radar, small, legitimate businesses.
Fair enough. I mean, I don't know too much about it. I know you've talked about it in the past. It's been around a long time.
Here's a pitch. Let's go back to, for any of our listeners that found us through the 7 investing world. I did a pitch on Avita Medical for that community that you could still find if you are a subscriber for 7 investing. And Salt DB, run by Max Chastko, also covers Avita Medical, and he's a fantastic analyst. So you could find your information in both places.
Fair enough. Like literally, if I just glance at the numbers on FinChat.io, though, I don't have the context about the company. I don't know if you know enough about it to steal this off the cuff, but they've been around for a decade plus. They're still running at a negative 80 to 90% operating margin. So they're losing money and it's getting worse. Their operating margin's getting worse.
It all has to do with the inflection points you see in biotech pre-commercial and post-commercial. Now that the latest product is already, they're projecting. So I'm saying they're projecting to be cash flow positive in 25. I think it was in the first half or beginning of second half.
Okay.
At the margins that they're at the beginning of the journey, this is exactly the moment you want to invest, when that's already on the horizon and it's visible and called out by management on the last earnings call. You don't want to wait till a little underfollowed company like this, the whole analyst game where they raise their price targets only after it already happened. So yes, I know my research enough to say that is not, that's an issue that is no longer going to be an issue. And it's not one of these dependent contingencies based on FDA approval. It's in hand. The only issue the company had, as I mentioned, is sales issues, because they were ramping sales too quickly, regulatory delay, that skewed the numbers, revenue dropped, price dropped, and now it's back on the upswing again.
Okay, cool. I'll take a look. It's probably not for the kids' portfolio, just because if it does well, I don't want all the kids saying to me, that was Uncle Christoph's pick, not yours, Luke.
Uncle Monkey.
Cool. But I'll look at it from my own portfolio. It might belong on the list of, at least on the to-do list of things to take a proper look at. Very good. Shall I tell you about my Safari stock?
Absolutely.
This is also one I've been on a bit of a journey with. So this is one, let's say it, I recommended for 7 investing over a year ago. I bought stock myself, and then I sold about 5 or 6 months ago because the company wasn't heading in the right direction. So it's Enphase Energy, ticker ENPH. And if I look back at why I sold, this is one that's, I think it deserves to be back on my radar now. So a couple of reasons I sold that and exited from my portfolio, high inflation environment. I misjudged this one. I definitely consider this to have been a mistake, the original buy, as we're going into an inflationary environment. Well, what do they do? And then that explains it. Enphase Energy, essentially, they do a bunch of stuff, but essentially the meat and veg of the businesses, they make residential solar and batteries. So solar panels on your roof, big batteries that go on the wall of your garage, and then you power your home. And they sell to homeowners, but they also sell to small business. And they've got some other bits and pieces as well, but that's the majority of the business. Those are expensive investments for a homeowner, right? They're high capex. You have to, it might cost you at least, tens of thousands of dollars to build an installation like that at home if you can't finance it. And in a high rate environment, the financing is more expensive. People have got less disposable money. So the sales are going down. And then the other reason I sold as well was I got a bad feeling listening to the CEO on the conference call, because it didn't sound like he was fully on top of supply chain and inventory. And he sounds a bit evasive. This is a benefit of actually listening to the audio of an earnings call sometimes, you get a sort of sense like the temperature in the room a little bit in the conversation with the analysts. I got a bad feeling, so that kind of gave me a bit of skittish. So I've exited it. It's back on my radar now. Like the stock is down about 40% from when I sold it, which is back in June this year. I'm not ready to buy yet. I want to listen to like the next earnings call. I want to see how they're managing like the turnaround with inventories. And this is back on my radar because the Trump tariffs thing, if it actually happens, could help them because they do their manufacturing in South Carolina. So, and then their majority of their market is domestic US. So this is like, American made, American sold. Like solar and batteries, they're kind of a commodity product, and you've got like China churning these things out at like bottom dollar. So it's quite hard for American manufacturers to compete. Well, this is the kind of industry where tariffs might actually help them if they do get implemented. Like it's just an idea at the moment. We don't know if it's going to really happen. But if tariffs do come in and if Chinese imports get taxed up the wazoo, it probably is going to help a company like Enphase. So yeah, I'm back looking at it once more.
This is one of those things I remain kind of confused about regarding the new administration. I talked about this with the first data point is here's Elon Musk, who did everything he could to get Trump elected, but Trump is the guy that said electric vehicles are no good. Like that weird.
Yeah.
What's the truth here, or how's this working behind scenes? Yeah. And so much of what you hear on the surface around Trump's administration is how bad they will be for renewables and so on and so forth. And yet, from my work with EOS, in the EOS community, everyone couldn't be more excited for Trump because of the tariff stuff, and EOS happens to be 94% US made. But it's hard. I think you were right to point to this as one of these. There's so many ambivalences that you kind of have to dig deeper to understand. Don't read the headlines, just merely the headlines. And I think the industry specifics are way more complex than we think. And Trump's administration might be a real net positive for renewables.
Possibly. It's very hard to say. Yeah, like if I do put this back in the portfolio, it's going to be a small allocation, that's for sure.
You swear, I don't know, the tech itself, you're confident in?
Yeah. I think it's relatively commoditized stuff now, right? Like Tesla, Powerwalls, and solar. There is a difference in technology between like Tesla and Solar Edge. Is that the other competitor? And Enphase, they do things a bit differently with like where the inverters are. And I remember like when I looked at this like a year and a half ago, I was most impressed with Enphase's solution. I felt it was marginally superior, but to be honest, there's not much in it. And it's not like, like the kilowatts being stored in your battery. It's not like those are like, like Nike brand or something that you might want. It's just power. Like who cares where it came from? It just, it powers your computer.
Yeah. Okay. All right.
I don't know if you want to touch this. You've got one more item on the roster. Do you want to talk about the stock you're waiting to short before we wrap up today?
Oh yeah, that's right. We got a comment on YouTube about my short that I was waiting to short Palantir. And the comment was some sassy thing like, that's degenerate gambling, not real long-term investing.
Yeah.
I don't know, I don't know the difference. But remember we talked about, I think we both agree that more likely than not, the valuation has gotten really, really stretched. I mean, it's probably one of the most expensive companies in the entire market, even based on the next 12-month earnings projections, right? Yeah. So this could be like one of these NVIDIA moments where if it so far surpasses expectations and it's still a good buy, but the whole price to perfection thing is the more likely outcome, I would say. And so there I was, on my phone, starting to look at shorting it. And this is one of those moments where I think my technical analysis stuff, as of now, prevented me from making a mistake. Because remember, in the short-term world, the trend is your friend. And the trend for Palantir is still up. And you have to wait this is where discipline comes in handy. You have to wait till the trend actually reverses, and then you go the other way because the trend has flipped. And I looked at my black magic on the charts, and what you saw when you did that, when I did that, is that the trend was not in the reversal yet. And so I said, I have to listen to what the price was telling me, and I withheld. But it is now clearly in my too short column, right? It's on my to-do list. I have alerts set for when it actually reverses. And then once it does, I'll probably allocate some amount of bananas to buy, a little bit of insurance for when the market corrects.
Yeah.
Yeah.
I support that. I think I'm still own some Palantir, but I've trimmed it heavily and I'm tempted to get out of it entirely. Like I've got a short list I've shared on Patreon of a couple of stocks I'm planning to trim or sell. I'm not taking short positions just yet, but yeah, definitely want to build that cash position, and that's somewhere I can at least get a few bucks from.
Well, here's why don't we do this? I want I think we both want more community engagement, because people, it's starting to get really fun. And so asking questions of each other, I think, is a good way to do that. Here's a question I'm hoping you could answer for us on our Patreon. You still own a fair amount of Palantir.
Yep.
And I'm saying I'm looking to short it, and you're saying you could see why that's a good move. Can you go on Patreon and answer for us your thought process about why you wouldn't sell out, say, either completely or the majority of your position now? Like, we'll just walk us through the process, like a poker, like you would, playing a hand of poker.
Yeah.
I think that'd be educational for me and for the rest of our listeners, because it's a real good case study moment.
Okay, cool. Yeah, I'll stick a short video on there of some thoughts.
Cool. And then as soon as that gets published, all of our free members and paid members get a notification that there's a new post.
Yeah. Alrighty. Good chat, Christoph.
Indeed.
Now, I don't want to keep you too long because you've got a massive stack of books you've got to tidy up.
Wait, you got to see this disaster. Hold on, you got to. Oh my God, like those, right? All the books, like by the window. That was like, I'm looking like 100 books on the floor. But look at this. My whiskey collection will help me survive the rebuilding project.
Wait, I do like a good whiskey. I like to learn to make new cocktails from time to time. So on my to-do list of learning to make cocktails is something called the penicillin. So it's actually one of my favorite cocktails to drink. I found a really good example in a bar in Saigon a few weeks ago. So that reminded me I love this drink. So it requires 2 different bottles of fine whiskey from your shelf back there. And here's Sushi come to say hello. And so I'll be using my own whiskey collection, which is vastly inferior to yours, to make me some penicillin this Christmas.
I think you need to post a recipe on our Patreon.
Sure thing.
Please, and thank you.
All right. Well, it's turning into a jungle in here, so I think we should wrap up this episode.
All right, Badger. What do we always say, tell our listeners?
We say, are you ready to become a beast of an investor?
Your journey starts right here.
A reminder that the people on this program may hold positions in the companies that are mentioned. Buying and selling stock carries financial risk, which could include loss of capital. The views in this program should not be taken as personalized advice. Before acting on any of the information provided, listeners are encouraged to consult a financial or tax professional.